now you can enter. We are getting ready to enter on GBP JPY. Because why did I say that? Because my 1 hour says bullish, my 5 minutes says bullish, my 15 minutes says bullish. So I have three confluences that is telling me that I should go long. All right. Now at this spot, you can see here we already have a long positioning. We already have a market structure shift, which is this a change of character, sweeping out the liquidity, sweeping out this current high here, and this is our new high. These are level of this is the level that which buyers are telling us that they are in the market, they are dominating the market, because even this middle candle is a fair value gap. So there's an imbalance in the market, and when there's an imbalance in the market, what does it mean? It means that one side is dominating and the other side is not dominating. So if balance is balanced, if price is balanced in the market, it means that this is 50-50. But if it's not balanced, it means that the ratio is around 60-40 or 70-30. So right now the market is currently in the favor of the bulls. So what we want to do now as a SMC traders, we already have our 1 hour order block right about this spot. We already have our order block, which is here, and our fair value gap in together. So we'll be waiting to long this position here. Let me delete this. So let me just add something like this. So you can see that this is our order block here, and this is the fair value gap, the gap between this candle here and this candle here. So this is our fair value gap. So I'll just mark out it like something like this, our 1 hour fair value gap. So I can just put something here and write it, change it as fair value gap, and I can just lock it. Alright, so right here, some retail traders will want to go long around this zone here. Once they see that price is at this their entry here, they want to, because of this entry, because of this conservative entry, they want to go long. But I will not want to do that. I want to go to the 5 minutes to do my great setup, my A plus setup. Now I already see that price has already mitigated to my order block. You can see that this was our break of structure to the upside. That's the change of character, and price has mitigated that order block, not closing below it, but mitigating at around that order block and fair value gap zone. So what we are waiting for? We are waiting for a market structure shift on the 5 or 15 minutes to go long to this parallel channel, or you can leave it at this recent high. You can put your TP at this, but me, I want to put my own at this parallel channel. So what do I want to do now? Let's go to our 5 minutes. 5 minutes is better. So on our 5 minutes, we can see that price just shifted structure. You know that before, price was on a downtrend. You can see that price was dominating. The sellers were dominating. Now all of a sudden, we have price. No, let me mark it this way. We have, this was where price is, or let me mark something like this. Sorry, let me mark something like this. You know, price was dominating, the sellers were dominating the market. You can see the movement. You can see the movement, and all of a sudden we already have a market structure shift, which is a change of character to the upside, right? So if I should bring this thing out, now, you can see that price does shift structure from downside to the upside, like something, we have something like this. So I will just call it a break of structure. No, let me not call it. Let me call it a market structure shift. Call it a market structure shift. So we can see we already have a good, nice A plus setup. So what I will be waiting for, I'll be waiting for price to mitigate this zone here. So I'll just draw my Fibonacci from this current low. So our current low, mind you, it is not the this thing, but it's the current low. So you want to mark it from this week here to where it started, around here, right here. So I'll be expecting price to do what? I'll be expecting price to move like this from here, touching around my 60 or 78% level of my retracement of my Fibonacci, up to my 2% of my Fibonacci 2. that's what I want. So this around this zone here is my POI. So let me clear this and this, so I can just, and this, and this too. So I can just mark something like, let's say, my POI zone. Let me add this to the charts. So I can just say this will be my POI zone around here. Alright, sorry. Let me mark. It's because I'm using a phone. If to say I'm using a laptop now, it would have been better. But let's say this is my POI zone, so my point of interest, I can just lock it. So I'm expecting price to hit this my POI zone. Then for my take profit, I want to set my take profit around my entry from this 60% of my retracement zone, and I want to adjust my, I don't want to put my stop loss here again. My stop loss will be just below this recent low of where I draw the beginning of my Fibonacci retracement, which is this zone here. So I want to put my, this is where the end of my stop loss is. So this is where it is. So you don't want to adjust it a little bit lower than where it is. So you want to enter a position. So you want to enter a position from that zone. You want to enter a position from here, from there to, let's say, you want to enter a position from here to this parallel channel here on the 5 minutes. So that's how it is. We're expecting price to come down to this POI. So once it has done that, then we'll short the position. Wait, I'm looking for a 2. Hide. Okay. Now trend line. So you could just mark something like this. You want to mark something like this from here, telling us that price has done what? Price has shifted structure to the upside. So it will be like a change of character or a market structure shift. Either the two, it still works. So we're expecting price to come down to our POI and we're going long. Alright.